Right now, the $10,000 cash rule can create a much bigger problem when someone treats it like a way to stay invisible, not because the money is illegal, not because the account is suspicious, because the reason a transaction is divided can matter more than the amount of each deposit. There are 3 rules here. The first controls when a bank must report cash. The second explains how deliberately staying under the threshold can become structuring. And the last involves money from your own family that may not be taxable, yet can still leave a confusing tax form behind. In the most serious situation, your bank may file a report and is legally prohibited from telling you it did. This is Senior Money Guide. We explain the rules that can turn an ordinary retirement money decision into an expensive surprise using official sources you can verify yourself.
Under Federal Bank Secrecy Act regulations, a financial institution generally
must file a currency transaction report when a deposit, withdrawal, currency exchange, or other transaction in physical currency exceeds $10,000.
Currency means cash. It does not mean every check, wire, ACH transfer, or electronic payment above $10,000 creates the same report.
A currency transaction report is not an accusation. Legitimate cash transactions occur every day.
The report records the transaction. It does not by itself mean the customer committed a crime. But the threshold is not a line that makes cash below it invisible. When a financial institution knows multiple cash transactions are by or on behalf of the same person, it generally combines cash moving in or cash moving out during one business day. If the total exceeds $10,000, reporting can be required. Consider a composite example based on a common misunderstanding. A man I will call Robert is 69, a retired warehouse supervisor in Dayton, Ohio.
He sells an old fishing boat for $18,500 in cash. The sale is legitimate.
He has a signed bill of sale and a clear explanation for where the money came from. Then a friend gives him bad advice. Never deposit more than $10,000 at once, the friend said.
Robert deposits $9,000 on Monday and plans to deposit the remaining $9,500 later because he believes smaller deposits will keep the transaction from being reported. The boat sale was not the problem. The cash was not the problem. The purpose behind dividing the deposits created the risk.
Federal law prohibits structuring transactions for the purpose of evading a reporting or record-keeping requirement. Legitimate money does not become safer because someone redesigns deposits around the threshold. Robert did nothing wrong by selling his boat or depositing the proceeds. The mistake began when he changed the transaction specifically to avoid the report. That leads directly into the second rule. Banks also have suspicious activity reporting duties. A required bank suspicious activity report generally involves at least $5,000 and facts giving the bank reason to suspect illegal funds, an attempt to evade reporting requirements, or activity with no apparent lawful purpose.
And if a suspicious activity report is filed, the bank cannot reveal its existence to the customer. No phone call, no copy in the mail,
no explanation at the teller window. That does not mean every large cash transaction creates a suspicious activity report. It means the system does not protect you from bad advice. The bank reports the activity presented to it, and your records must explain the legitimate source and purpose of the money. For the lower-income retiree who occasionally receives help from adult children, the greater concern may be separating personal support from taxable business income. For the comfortable retiree selling property, handling large cash proceeds, or moving substantial sums, the greater risk is treating a reporting threshold as a strategy. Both groups need clear records. Neither group receives a personalized explanation before the transaction happens.
Now here is the third rule, because this is where families get confused at tax time. Your daughter sends money through a payment app to help with groceries. Your son reimburses you for a repair.
Relatives send holiday gifts. Those payments are not automatically taxable income. The IRS says money from friends or family that is a gift or repayment of a personal expense should not be reported on Form 1099-K and is not taxable income. But payment apps and online marketplaces can issue Form 1099-K for payments involving goods or services. Under the current federal threshold, a third-party platform generally must report when those payments exceed $20,000 and more than 200 transactions. A platform may still issue a form below that level.
So do not assume every payment app transfer is income, and do not assume every Form 1099-K means you owe tax. Keep records showing whether each payment was a gift, reimbursement, personal sale, or payment for goods or services. Mark personal payments as non-business when possible. If an incorrect form arrives, do not ignore it. Contact the issuer and follow IRS instructions for correcting it. Here is what to do now. 5 steps. Step 1. Treat $10,000 as a cash reporting threshold, never as a strategy for dividing transactions. Step 2. Move legitimate money normally. Do not redesign activity for the purpose of avoiding a report. Step 3. Keep bills of sale, receipts, withdrawal records, deposit slips, and notes explaining legitimate cash activity. Step 4. Separate personal family transfers from business payments and mark personal payments as non-business when possible. Step 5. If a tax form or notice conflicts with your records, read it immediately and respond by the stated deadline.
The $10,000 number is a reporting threshold. It is not a protection strategy. Not every cash transaction is suspicious. Not every family payment is taxable. Not every tax form means you owe money. But the system reports what it sees. It does not explain your intent for you. 5 steps, taken in order, close the gap. Before you make your next cash deposit or move family money through a 01N app, make sure you can explain exactly what it was for. The official links are below.
If you found this video useful, subscribe to Senior Money Guide for regular updates on IRS rules, Social Security, and more that can affect your retirement.